The appetite for risk has increased on the markets. Positive wave has hit traders by the end of this trading week as Donald Trump and Boris Johnson downplayed the existing risks. The latest news has turned to be unfavorable for the US dollar, so it's trading at multi-month lows. The US dollar index that measures the value of the American currency against other majors plunged to 96.83 in late deals. On a daily basis, it lost about 0.6%. At the same time, the greenback's opponents are rising steadily, especially the pound sterling. It has demonstrated the best performance for the past decades. The British pound gains ground amid the recent developments in the UK, where the political uncertainty has finally faded away. Moreover, the good news about a high possibility of the US and China striking a deal also encouraged market participants who expected a less positive outcome. Therefore, the rise was even faster. The Chinese yuan advanced while the Japanese yen depreciated, which coincided with the forecast of a rise above 109 in the dollar-yen pair. The outlook for the US dollar is pessimistic. The American currency can take a nosedive as the country's central bank is planning to inject a record sum into the financial system. The total liquidity volume is expected to be shy below $500 billion. The US dollar versus the Canadian dollar pair has been trading in a bearish trend this week. The Canadian dollar managed to reach the level of 1.3162 amid the rise in oil prices and the weaker US dollar. Today, the pair was trading flat as the recent events had been already factored in. Today, Bank of Canada's Governor Stephen Poloz delivered a speech, but he said nothing significant that could spark interest from investors. Overall, his comments were vague and did not provide any significant ideas about the economic outlook. The only thing that Mr. Poloz paid attention to was a moderate recovery of the global economy. The dollar versus the Canadian dollar pair is likely to maintain the bearish bias, but it looks like it's gathering momentum for a rebound. If the pair fails to hold above 1.3150, it will move towards 1.31. The widespread optimism regarding the first phase of the US-China trade deal can fade away in the future. Today, none of China's state media provided any publications on the issue. Beijing's restrained reaction indicates uncertainty as to whether the parties will be able to strike the deal after all. That's all for today. Thank you for watching and have a nice weekend. Bye.